a half. Let's bring in Oliver Sloup with Blue Line Futures. Oliver is at the edge of the trading floor at the CME Group in Chicago, and he joins us now. And Oliver, is the trade continuing to get quieter and quieter at this point?
It sure is. The pits are a little bit empty, and I think you're seeing some of that reflected in the volume and really just the day's ranges overall. You were talking about corn kind of hovering right around that 350 mark. This is a level we've been talking about on your guys' show for some time, kind of being a magnet. It was for that December contract. I think will be again for March until we can get us a fundamental catalyst to give us a next directional breakout or a breakdown. We did have pretty good exports this morning, which was nice to see, but we're going to want to see that be more of a trend on a week-by-week basis, not necessarily one great number every 4 weeks.
You make a good point. Good numbers here for a week, but we still need good numbers overall for the year, and we just haven't achieved those just yet. Makes some in the trade wonder if USDA may have to adjust those in their January 12th report.
Yeah, I think that's exactly right, and I think you're seeing the same thing with soybeans. We were at the top end of expectations with this morning's export sales, but we really need to see better than expectations to really get this market some stabilization here in the near term. We do have January option expiration tomorrow, which might be keeping things in check. There's some decent amount of open interest, 350 for corn and 950 for soybeans, and we are oversold here in soybeans as well. So there might be a little bit of a short covering rally attempt here as we round out the week in soybeans. But boy, it is kind of a technical graveyard there. The bulls really want to see closes back above 967 and 968. That was previous support. Now will be significant resistance going forward.
Hey, speaking of resistance, where are you seeing resistance in this corn market above 950 in that area? Is there quite a bit of overhead and heavy resistance?
I'm sorry, you said corn and 950. Or corn or soybeans?
Corn, yeah. I just sent everybody into shock there. Corn at 350. I'm sorry. How much above 350
hey,
in corn?
950 corn sounds good to me.
Well, it does to a lot of people, I'm sure.
You know, we're playing it basically a nickel on either side of 350. I think you have an opportunity to sell 355, an opportunity to buy 345. So we're playing a little tight range until we get that fundamental shift. And that might come in that January USDA report. But until then, I think you're able to play a little bit of a range here, a nickel on either side of 350.
All right, wheat market here. Let's look at the nearby contract to that Chicago wheat market. We've been in that 3-cent range higher a good part of the day. March Chicago wheat up 3.5 right now at 427. March Kansas City wheat up 2 at 424.5. March Minneapolis wheat up 1 at 618 3/4. So Oliver, still quite a bit of optimism here for the wheat market.
A little bit. We do know that funds have been accumulating and establishing a pretty good net size short position. I believe it's their second largest short on record. And so I think more of this is just maybe some short covering on the back of, again, good export numbers this morning, but we need to see that continue to be a trend. I think there's significant resistance in this market, still a little bit higher, 437. That's going to be the 50-day moving average, a very, very simple indicator, but it is a technical that we have not been able to close above since July. If the bulls can achieve that here in the intermediate term, perhaps we see additional short covering, but until we see a conviction close above that, I think the bears remain in control of this market.
Oliver, let's you and I talk about this livestock trade. We'll do that next.